Let's move right on and focus in on aviation. There have been some reports that have come out today, but are airlines under pressure? Is there a risk to profitability, and what is the GST impact? Kinjal Shah, Assistant Vice President Corporate Sector Ratings at ICRA, with us in the studios to chat about just that. And Kinjal, I just want to start off with the ATF prices, and that's been on the decline of late. Seems like the near-term trend is favorable. How much better do you see the EBITDA margins in the first quarter for some of these players?
Yeah, like you said, that's right. As in over the last 3 months, we've seen some upsides for the aviation industry because of the respite they are getting from the fuel prices. So FY16 was one such year where we had seen that the ATF prices had declined significantly, and that had actually transformed into lower fares for the airlines, and that had actually fueled the passenger growth. So similarly, in the current year, the first 3 months, we have seen robust passenger growth continuing at around 15-20% odd month on month. And also because the capacity addition has not been in line with that kind of passenger growth, the fares have still been maintained at the lower levels, and that is fueled by the lower ATF prices. That is definitely going to boost the EBITDA margins of the airlines. So we really see that compared to the last few quarters, the operating margins of the airline industry should improve in Q1 FY18. But overall FY18, we still do not see a very significant improvement, and we expect the pressures on the airlines to continue, primarily because we expect the capacity addition to continue at around 17-20% odd. Over the last 2 years, the passenger growth had been a stellar 20% year on year. So we do not really expect that kind of passenger growth to keep on sustaining. And the passenger growth should, over the medium term, at some time reduce going forward.
Right. You know, Kinjal, to my mind, I think aside of the debt problem that, you know, some of these companies are leveraged, and we all know what's happening with Air India. Yeah. I mean, I think the operating ratios seem to be on track. I mean, there's a reason why, you know, there's so much buying interest in the market in stocks like Jet Airways. SpiceJet also, you know, went past 70. And we know the story with Indigo. So could this just be, you know, like they say, mid-air turbulence, which will just pass by for the sector?
Yeah, that's what we expect, because obviously, see, over the last 2 years, there has been some improvement in the performance of the airlines compared to the previous years, say pre-FY14 levels. FY16 was one such spectacular year for the airlines, but FY17, as we saw the fuel prices increasing, that had again impacted the profitability of the airlines. So the key here that we are seeing is that the airlines are not able to strengthen the yields. So that's also because of the increasing competitive intensity. Currently, there are around 12 airlines in India, and there are few more coming in line, and the capacity additions by most of the players still continue. So we see that there would be certain such ups and downs keep on happening quarter on quarter. But overall, till the time the industry is able to strengthen the yields, the pressure on profitability would continue for the airlines.
So which airline, you know, if you could like break it down, obviously you're going to be looking at more from a balance sheet perspective. Where do you see there being enough cash flow to sustain through this low or sluggish yield environment, so to speak?
See, obviously, we would not be commenting on airline specifics. We comment on the aviation industry as such. But yeah, since as and when the profitability of the airlines improves, or even if they make positive profits, the part of the accruals keep on going on retiring the debt. So that has really helped reduce the debt levels of the airlines. So even FY16, FY17, we have seen that at least for the listed airlines, we have seen that the debt levels have been pared significantly. So also FY18, we still expect that these listed airlines would continue to make profits, though maybe lower than FY17 levels, but that would again be partly used to pare off the debts. So the balance sheets could really become stronger compared to the previous years, but finally it would again boil down to how they are able to reduce debt on a sustainable basis.
Okay, lovely chatting with you. Thanks for coming by to our studios, giving us the views on the overall aviation space. For now, tempered moves is what you're seeing on the stocks, 1146 on Interglobe Aviation. Well, as we wrap it up right here on Market Sense here at